Well, I think first of all, you cannot just look at our funds allocation on a standalone basis. We also have to look at it from the point of view of how the market structure it, right? For example, if the market is predominantly China property, then in some way I have to be more China property as well on a relative basis because this is the opportunity set, right? So I think, and also we also have to consider on a risk-adjusted basis which sector will give us the best risk-adjusted return potential. And for the longest time, property represent the sector that both in terms of the allocation in the market as well as in terms of the potential risk-adjusted return potential, that's the best candidate for us, right? But nonetheless, having said that, we don't also invest according to the market allocation, right? Doesn't mean that if the market has more property, we have to own more property because we are benchmark on agnostic. Right? Everything we do is all from a projected risk-reward proposition, right? So therefore, right now, we are trading about I remember, in the teen, right, which is quite investable. Yet we are, I think, in terms of the benchmark right now, we are probably around the benchmark. But there are times that we tremendously underweight the benchmark, and there are times that we slightly overweight versus the benchmark. So this overall allocation in the Chinese property sector is very dynamic. We do it every day. And also, when we try to expand or reduce our China property exposure, we also pay a lot of attention to we position ourselves within different names along the different credit curve of this sector. So it's really, really dynamic. So this is simply not a China property fund, but instead, we allocate capital using our rigorous bottom-up analysis and make our decision based on the best risk-adjusted return expectation from our view.